Hi, I'm Megan Kim with Cozy and the Greater Cleveland Partnership, and I am happy today to be joined by Laura Steinbrink, who's managing member of Emerald Built Environments. So Laura's going to talk to us today about sustainability practices. For small and mid-sized companies, there is money out there to help you embrace sustainability within your business, and Laura is the expert here and going to give us a lot of information. So here's where I want to start with you. So you've been doing this for a long time, so you get the importance of it. So let's start there. Why should businesses be thinking about embracing some of these sustainability practices in their companies?
Sure. So sustainability is a trend that's been increasing its importance to companies over the last several decades. And I would say that the most important thing right now is because your stakeholders are requiring it. And what that means is if you're competing in a global economy, meaning you're competing, you have stakeholders that could be your employees, it could be your investors, it could be your customers. And increasingly, they are requiring that you understand the environmental impact that you have on your business. And also, if you employ people, your employees want to work at a business that cares.
Yes. And I think that a lot of businesses don't think about that because this is complicated. So where do they even start? So break it down for us. How do they start to find these resources? Let's just start there.
When businesses want to get started with sustainability, it's really important to know what matters. So manufacturing companies may have a different sort of footprint or environmental impact than companies that are, say, technology, software related or professional service or something like that. So understanding what is material to your company, that term materiality, is really important to then being able to identify what kind of incentives would apply to your business.
So what are examples of upgrades that businesses can do whether it's fleet or their building or anything of that nature?
Businesses that have a physical footprint, meaning they have leased or owned office space, are going to have incentives available to them that are specific to the efficiency of the building. And I would say when it comes to the efficiency of the building, that not only do sustainable spaces turn out to be healthier for the people that work in them, they also are cost savings opportunities. So we can't ever forget cost savings is an important reason why any business owner might look to sustainability.
So when you're talking about something like a building, does it matter the size of the building? So if I'm a really small company, can I still have accessibility to some of these grants or tax incentives regardless of size?
So interestingly, Emerald, the firm that I'm with, we inhabit 1,700 square feet of leased office space in, 5-story, 60,000 square foot office building. And we were able to apply sustainable principles and practices to design and renovation of our office space, which could, in theory, be also eligible for incentives, such as things like your lighting or the controls that you have on your lighting or heating and cooling improvements. So maybe the roofing opportunities, which would be more for the building owner or a firm that owns the whole building, would only apply for roofing. But yet, even in leased office space as small as 1,500 square feet, there's absolutely tax incentives and grants and opportunities available.
So we also talked about fleet. I know you and I, when we were sort of prepping for this, we were talking as well about, is there a right timeline? How do you explore if it's the right opportunity for you? Do you have any advice for businesses who have a vehicle fleet?
So there's opportunities for single vehicles, whether or not it's a car or a truck. And obviously, let's say if a firm owns a fleet of trucks because, they're out distributing or whatever, they're out providing service, it maybe doesn't make sense to take all of the fleet and turn it over immediately for a sustainable grant that's to pay for example, an electric vehicle. But perhaps that fleet, they know exactly which truck is going to go next. So our recommendation is always to have a baseline of where you are and what's your capital improvement plan. Is it the improvement plan for your business, your building, and your fleet? And just fitting in the incentives to when it makes sense to make that investment.
So now you've sold them on why they should do it. So how do they start to find the tax incentives? Like what programs exist?
So there are incentives available at sometimes the local level. For example, in the Cuyahoga County, there's loan funds available. There are state incentives, especially for buildings that are being renovated. So they call it the Economic Development Loan Fund. And then there are opportunities also at the federal level, and there's a variety. So they might pay for incentives towards your fleet. It might be incentives towards putting in an EV charger in the parking lot. And it is also the deductions for the 179D or 45L, which are about residential units and office space that are based on a square foot and efficiency savings.
So beyond the tax incentives, is there other capital that's available to make upgrades?
So there is other capital. So there are different financing vehicles, such as the Green Bank, which we're hearing more and more about because the federal government has put a significant investment into these local green banks, which are then providing loans for efficiencies. There's something called PACE financing, which is property assessed clean energy. So for commercial buildings, they're able to work with organizations to receive a loan fund that is off balance sheet, meaning it shows up, your payments show up on your property tax as opposed to on your balance sheet. And therefore, it stays with the building for the life of the building. So PACE is a great opportunity for financing many efficiency improvement projects because you can make the investment today and get the benefit of the loan fund, but you're then not responsible for the full cost of the improvement should you go to sell the building.
So I asked about size of the building. What about from an industry perspective? Are there certain types of businesses that are eligible, or is it sort of anybody can access these?
So it's really about what's the incentive trying to help you accomplish. So there's a bunch of incentives, like I've discussed, that are about the building. So if your office is virtual, perhaps that's not going to work for you as much as somebody that either leases space or owns space. And then if you're in an industry like manufacturing, there's lots of other incentives that are available that look at the process load and how you're actually making that product. And they're all geared at trying to reduce the emissions that might come from your process. So understanding that materiality point again, understanding what is material to your business, then really helps to narrow what incentives would apply.
So talk to us about the process a little bit. So I find some of the incentives, or I find the applications, are they competitive? Are they easy to fill out? What's the process like? Because I know you're a small business owner. You have so many things on your plate, as well as many of these small and middle market companies that we're talking to today. And so it feels like another thing to do. So how complicated is that process?
So it, again, depending on what kind of the incentive is and what it's trying to help you. If, for example, you owned a building and you wanted to put an EV charger in your parking lot, a lot more straightforward. And the service provider that's going to sell you the EV charger will likely take care of all of the paperwork. If you are building a new home, because it also applies residential, the home builder usually will fill out the paperwork to get the tax incentive and give it to you. The new windows for your office or your home, that's going to be usually filled out by the service provider. But if you're doing a major renovation to your building, it's very likely that you're going to want to have a specialty consultant at the table with you, because there's two big pieces to the building specific incentives. One is being able to demonstrate the percent improvement of efficiency, which means you have to have an energy model. And engineers and other firms that do sustainability consulting provide energy models. And then that model is then documented through the tax return or the tax documentation that the accountant needs. So not all accountants are familiar with the tax incentives for efficiency. And so sometimes there's, again, a specialty consultant at the table that can help with the documentation for some of the tax incentives. And then if it's some of the other incentives that we talked about, like PACE or the Ohio Department of Development loan funds, they're going to look for something like an energy model that is confirming the improvement value of the efficiency of whatever it was you improve. So lighting efficiency, HVAC efficiency, motors and drives, roofing, all of those things need to be documented by a professional engineer to demonstrate what the savings is so that they can then calculate the incentive.
Well, we're lucky to have you. You're one of those professionals. So do you have any success stories of a business that you did that with and it was really worthwhile for them? Or can you say it was an estimated savings of this, or how it positively impacted their company?
So my firm particularly works with building owners and their teams, and we've worked on several projects where the project wasn't going to work, meaning they couldn't make the financial sense of it if they weren't able to also get some of the incentives tied to that investment. So there are lots of examples of where we've been able to help justify the improvement in the HVAC system, the heating and cooling system, to make it that much more efficient, to get that much more dollars that offset, which means maybe they're going to put a little bit more first cost in, but the long-term savings is going to be there, and therefore the incentive is bigger. And so we've been able on many opportunities to do that. So lighting improvement, though, on the whole, if your building hasn't had a lighting upgrade in the last 15 years or isn't all LED, there's probably at least 10% in efficiency savings right there from a single improvement.
So where do people go? Is there specific sites that you recommend or a place that has a lot of the incentives listed? I mean, where should people get started?
Let's say you have operations here in Northeast Ohio, but you also have businesses elsewhere. The number one resource we go to is the Desire website. It's dsire.org. And that website has provided a nationwide look at where the incentives are based on a jurisdictional level. So you can sort, for example, if you have business in Nashville, Tennessee, you can sort Tennessee, you can sort Nashville, or if you know that you just want to work on efficiency for your fleet, you can just type in certain things like automobile or trucks, and they'll pull up the incentives that are locally available for the specific thing you're looking for.
Okay, so we've talked a little bit about some industries, but let's talk about manufacturing, which is one of our biggest segments. What opportunities are there for manufacturing companies specifically?
So manufacturing companies, unlike professional service firms or the like, have a process load. That's the energy required to make the product. And not only the process load, which likely is producing emissions, not only from the energy used, but perhaps from the off-gassing or whatever it is that comes out of their process. There's funds available for improved air quality, so reducing any sort of the emissions. So it's not just the emissions from the energy, but if, for example, there's some sort of particulate that's released or others, there's incentives that are specific about the process. So how do they get started? Well, they really need to understand the materiality of their process. So is it waste? Is it air quality? Is it energy? And where are the opportunities to look into that? Because there are grants that deal with each one of those elements. So understanding what the opportunities are can then lead you into the searching and refining of where to look.
So this has been extremely informative, and I certainly hope that our small and middle market companies understand how valuable this can be for your business and what opportunities there are for you to also embrace some sustainability practices and get some tax incentives and grants to support that. So thank you, Laura, for being with us today. Very helpful. We will make sure that Laura's contact information is out there so that you can reach out to her. And we will also have our resources listed on the Cozy and Creative Living Partnership websites.